This is your morning pre-market brief. It's educational, it's informational, and it is not financial advice. So let's get you up to speed on a monster week ahead. Here are the key themes shaping markets this week. Q2 earnings season officially kicks off, with profit growth expected to top 20% for a second consecutive quarter, setting a high bar for guidance. June inflation data is expected to show further cooling in headline CPI, giving the Fed more room to maneuver on rates. Newly sworn-in Fed Chair Kevin Warsh delivers his first congressional testimony this week, and traders will parse every syllable for policy signals. A roughly 10% drop in gasoline prices following the mid-June U.S.-Iran peace deal is filtering through to consumers and pulling headline inflation lower. The big banks fire the starting gun on earnings season, and their commentary on credit quality, consumer health, and deal-making will set the tone for the quarter. Here's what's on the economic calendar this week. Tuesday brings the June CPI report, the single most market-moving data point of the week, with consensus expecting a continued cool-down in headline inflation. Also Tuesday, Fed Chair Warsh testifies before Congress for the first time since taking the gavel, making it a rare same-day macro doubleheader. Thursday's Producer Price Index will show whether wholesale costs are confirming the disinflationary trend seen in consumer prices. June retail sales land Thursday as well, offering a direct read on whether the American consumer is still spending despite elevated rates. Friday rounds out the data with June industrial production, a gauge of factory and utility output that speaks to the manufacturing side of the economy. And rounding out the calendar on the sentiment front, Friday also delivers the preliminary Michigan consumer sentiment reading. Watch the inflation expectations component, because that's what the Fed watches. Now let's talk earnings. Here's who's reporting and why it matters. JP Morgan and Citigroup report Tuesday, and as the two largest consumer-facing banks, their loan loss provisions will tell you exactly how Main Street is holding up. Goldman Sachs and Wells Fargo follow, with Goldman's investment banking fees signaling whether the IPO and M&A pipeline is finally reopening. Bank of America reports midweek, and its massive rate-sensitive bond portfolio makes it a direct read on how banks are navigating the yield curve. Morgan Stanley and BlackRock round out the financials. Morgan Stanley for wealth management flows, BlackRock for where the world's largest asset manager sees money moving. ASML reports, and as the sole maker of extreme ultraviolet lithography machines, its order book is the earliest forward indicator for the entire global chip cycle. And a few more heavyweight names on deck. Netflix reports subscriber numbers, and after last quarter's ad-tier momentum, the street wants to see whether average revenue per user is inflecting higher. TSMC, the world's contract chip foundry, reports, and its revenue guidance is effectively a demand forecast for every AI and smartphone chipmaker on the planet. Johnson & Johnson rounds out the week as a defensive bellwether, where investors will focus on pharmaceutical pipeline updates and the ongoing talc litigation overhang. This week is a rare collision of macro and micro. June CPI lands Tuesday alongside Chair Warsh's first Hill testimony, just as the big banks fire the starting gun on Q2 earnings. So the real question isn't whether results beat estimates, it's whether forward guidance and margins can justify where valuations already sit, especially if cooling inflation, driven by that post-Iran deal gasoline plunge, doesn't match what bank CEOs are actually seeing in consumer credit and spending. That's your week ahead. Remember, nothing here is financial advice, just education to help you navigate the noise. So if this briefed you up, subscribe and we'll see you tomorrow morning.